Welcome to Online Trading Campus and welcome to our unique OTC Futures course. Let's continue with our Module 4 Advanced. In this lesson, we cover regular trading hour session charts. This lesson will complement the first lesson in this module. Since futures markets have specific opening hours, it is essential to know about the different periods that have only little volume. We will go through each market and I will show you how you can display only the time of the day where banks and institutions are most active. Hence, during that time we will find low risk, high reward and high probability trading opportunities. As we learned in the previous lesson, today's futures markets are divided up into two sessions. There was no electronic trading prior to or after pit trading session in the early 90s. This meant all of the day's activity was squeezed into about 7 or 8 hours of pit trading. The nice thing was the increased volatility because commercials had to make their big trading decisions during these same short hours. Today, the financial futures and some of the physical commodities are almost trading 24 hours per day, so market participants are not confined to just the shorter 7 or 8 hours of a pit trading session. With markets that are open for almost 24 hours, they are trading during times when the United States market participants are not as actively trading, and this dramatically reduces the volume in a futures contract. So what are the two sessions again? We have the regular trading hours, trades during the highest volume session, and the extended trading hours, trades prior to and just after the highest volume session, also called the clawback session. Both of these trading sessions can yield good supply and demand zones, but there are times when the extended trading hour sessions has such low volume that it makes it very difficult to find a quality supply or demand zone since there is no institutional activity. Therefore, we could use the regular trading hour session chart only to spot institutional activity and consequently find high quality supply and demand zones. Gaps are much more common on a regular trading hours chart and can create some strong supply and demand zones for us, as you will see in a minute. However, sometimes these gaps can be large. When price begins to retrace back to these gaps, there can be days of trading between the gap, closing and opening prices in which there are no candles to the left. If we were looking at an extended trading hours chart, so in other words a regular chart, there may be candles trading between the gap during the night sessions, possibly creating some zones as well. Since the regular trading hour session plots data during the highest volume time of the day, the supply and demand zones that get created will tend to be stronger because of the larger number of orders used to create the zones and therefore possibly still have some remaining orders when price returns. Each trader will have to decide if they find value in one or the other session or possibly both sessions. By backtesting your zones over some historical data, you should be able to form this decision. So you might remember this crude oil chart from lesson 1 in this module. This chart illustrates the extended trading hours and regular trading hour sessions combined. So that's basically our common chart when you plot HCl equals 103xn. Notice the lower volume during much of the extended trading hour sessions trading, but when the regular trading hour session starts, the volume spikes. We also said that it's beneficial for our trading to find zones that are located during the regular trading hours because of the obvious institutional activity. So rather than always looking at the volume indicator and drawing vertical lines to split the regular trading hours from the extended trading hours, we could easily just create a chart that only shows the regular trading hours and removes all extended trading hours candles. So a crude oil chart with only regular trading hours would look like this. This screenshot illustrates a regular trading hours chart with only the highest volume periods of the day plotted. Once you learn to create these time sessions, you too will be able to see the difference between low volume time and high volume time in the futures markets. Notice first of all the volume. The volume is always stable and never flat. And recognize the price gaps all over the charts. These are very important gaps because some of them represent important supply and demand zones that could cause a turning point in the market, which results in a high risk to reward proposition for us. So here you see another regular trading hours chart of silver. Again, you can clearly see the gaps all over the chart and recognize that some of them represent important zones that cause big moves in the silver market. Now, of course, you want to know how to create and plot these charts. So let me explain you how to create a regular trading hour session chart on TradeStation based on a crude oil example. Open an intraday 60-minute chart of CL. Right-click on chart and click time frame and customize. Choose properties, choose session, choose use custom session, choose create, name your session, for instance energy RTH, choose add, name your session the same as step 7, choose Monday for start day, choose start time of 9 a.m, time is based on exchange time, choose Monday for end day, choose end time of 2:30 p.m, time is also based on exchange time, check box for use this session as end of day marker, choose OK, choose add Monday to Friday, choose OK, and choose OK again. That's it. If you want to create other regular trading hour sessions, you just use the times from that slide. For grains, use 8:30 a.m. to 1:15 p.m. For gold, use 8:20 a.m. to 1:30 p.m. For silver, use 8:25 a.m. to 1:25 p.m. For copper, use 8:10 a.m. to 1 p.m. For all energy products like crude oil, what we just used, also the same would apply for natural gas. Use 9 a.m. to 2:30 p.m. For all interest rates, use 7:20 a.m. to 2 p.m. And for livestock, use 9:05 a.m. to 1 p.m. So you must follow each of these instructions perfectly, or else you will get an inaccurate session time. Once you have created your custom time sessions, then you will look on the TradeStation toolbar and find the session icon. The icon has a small calendar with a clock in front of it. Once you open that icon, the list of custom sessions you created will be displayed for you. Click on the session you wish to use and you now will have the regular trading hour session of any futures contract that has one and that you created. Now, for equity indices, it works a little bit different. TradeStation users can look at regular trading hour charts for equity indices by entering their symbols. These are referred to as .d charts. How to incorporate the .d you see here on the slide based on a Dow Jones example. For the unadjusted chart, you use @ym.d equals 107xn, and for a contract specific chart, you use ymu20.d. Unfortunately, there are no other markets that you can view the regular trading hour chart sessions only by typing in their symbol. But as we learned, you can though create something called custom time sessions with TradeStation so you can view regular trading hour charts of any market you wish. So, what's my recommendation on how to use these regular trading hour charts? Well, I would always make sure that your lower time frame supply or demand zone is a zone that is located in the regular trading hours, simply because of the institutional activity that we see in the regular trading hours. So that's it for this lesson and the entire module, so stay tuned for the next module.